हमारे साथ अब एंड्रू हॉलैंड जुड़े हैं, उनसे बात करते हैं. Andrew, morning to you. Thanks for joining us and pleasure having you as always. Now, obviously markets have been in good momentum. We are near our highs, lifetime highs as well. And liquidity doesn't seem to dry up at this moment. What is your strategy on markets right now?
So, as I think we spoke last time, the strategy is keep with the momentum. And we'll just have to see when this liquidity driven global markets will come to an end, and what that is that brings it to an end. But then it's just difficult to fight the money flow. So we're sticking to our main sectors and companies that we like, and just riding with it for the time being until something changes.
Also, Andrew, what's your immediate view if we talk about from 2 to 3 months perspective? How much probability you see of markets going beyond 9,000 level, or what's your target on index if we talk about December end?
So, rather than just talk about the targets, I mean, obviously, this liquidity-driven rally could, easily take our markets to, towards its old highs of 9,100. If that coincided maybe with the new RBI governor cutting rates in October. I mean, all of these things, you can put on the table and say why the markets would go higher. And yet again, we're just missing the signs out there which are more negative. Which if liquidity changes, then we'll focus back on those negatives. But for the time being, I think globally, you have a backdrop of the fact that the US is obviously not going to, or the Federal Reserve is not going to increase rates in September. The ECB, will continue with their bond buying if they can find any bonds to buy, and the same in the UK. And on the 21st, we have, I think, the Japanese Bank of Japan coming out with probably more stimulus there. So, that backdrop leads you to, an easy liquidity-driven rally continuing, and that's probably what's going to keep our market bubbling along for the time being.
Also, Andrew, what's your view on the defensive sector? Precisely talking about IT space, there have been concerns regarding European business. There have been issues regarding BFSI segment. Do you think that this sector is over-owned and stock may further see selling pressure?
Yeah, I mean, we've been very negative about the IT sector for a very long time now, on the basis that the growth that the industry enjoyed was over, and with new technology globally, and also the fact that it's becoming more commodity-based type business, that the P's anywhere between 15 to 20 could not be justified for the kind of growth rates that you're getting. So until valuations come down to more reasonable levels, and more reasonable levels for me to get interested in the IT sector be around 10 PE, or should I say, the companies use their cash maybe to pay higher dividends, or give me something in terms of yield, then there's no reason to be participating in this sector. I mean, it's a bit like the telecom sector at the moment. There's a lot of headwinds that's not moving away from you. So you'll get incremental kind of bits of good news along the way, but over the longer term, it's just going to be bad news. So the IT sector and the telecom sector is two sectors we'll continue to avoid.
Andrew, also, since you already gave your view on telecom, at this point, the bigger question here is, who's going to drive the market upwards from here? Are they going to be stocks like auto and maybe selectively IT, or are they going to be banks, especially the public sector banks, who have witnessed a good rebound? I mean, who would you bet your money on right now?
I certainly wouldn't be buying PSU banks. I mean, fundamentally, nothing's changed for them, apart from obviously liquidity in the markets, them being under-owned and obviously at cheap valuations some months ago. But the competition from the private banks, the competition for the NBFCs is not going away from them. And as the economy expands in the second half of the year, they really don't have the balance sheet to take advantage of that. So the PSU banks will continue to decline in terms of the value that they can add to the banking sector going forward. Both from, if I look forward in terms of technology-wise as well, maybe there's one or two banks who will be able to stand out from that, but hardly any otherwise. So the banking sector, PSU banks don't want to be there, continue to be with the private banks. And obviously, with the expectation that the monsoon has been good and people will spend more money, then the auto sector and the cement sector from infrastructure spending will continue to lead the markets higher in our view.
Andrew, as you said, along with banking, auto have been strongly participating in recent run-up. But how do you approach some big names, especially Maruti Suzuki, Tata Motors, who have been they have been your favorite ones? Do you think most team is left there?
We obviously, the expectations are running quite high at the moment. That with the people who have received their, pay hikes or wage hikes recently will just now rush out and start spending on cars and bikes, and we think that will probably be the case. Obviously, the sales figures are showing that. So, we're quite happy to be in the sector. Would I be chasing it right now? I mean, would I be buying it right now? Selectively yes, but more two-wheelers than four-wheelers at this point. So, that's where we're positioned in our fund, is more towards the two-wheelers and four-wheelers, although we do have four-wheelers as well.
But Andrew, along with auto ancillary stocks have also created buzz in past 1 month. If I'm not wrong, you have been bullish on Ramakrishna Forging and other stocks. Do you still continue to hold them, or you have new choices in auto ancillary space?
Yeah, no, that was part of our, who supplies India, and I think as the auto sector continues to move forward, then obviously the auto ancillary companies, because of operational gearing, will see very significant gains in the bottom line profitability. So it's across the range of auto ancillary companies that we like. So Ramakrishna Forgings remains one of the favourites, yes.
ऑल राइट, चलिए इस बीच एक बार देख लेते हैं इंडेक्स में क्या हो रहा है. निफ्टी इस समय 8907 पर है, करीब 10 पॉइंट ऊपर. TCS अभी भी 5% नीचे. सो नेट ये आज सबसे बड़ा ड्रैग मार्केट पर क्रिएट करते हुए. एंड्रू, विद इन द इंडेक्स, व्हाट इज़ योर टेक ऑन स्टॉक्स लाइक ICICI or maybe HDFC Limited, who are now looking at monetizing their insurance vertical, because this will be followed by SBI also, who also has plans of floating their insurance arm IPO?
Yeah, I mean, obviously it has in terms of, a lot of analysts previously would do a sum of parts in terms of the valuation. So obviously that gets monetized, and that will help the share prices of these companies. But, when you go then back to the fundamentals, you've got to look at, which bank is best positioned, to take market share as the economy starts growing, and that would remain, obviously HDFC would be, and HDFC Bank would be the two which we would favour in the private banks as our top of the list, followed by the other private banks thereafter. I think that, the thing that I just want to say here in that, whilst the index might remain fairly stable around these levels and they maybe push higher, if I take today, if we didn't have a liquidity-driven market, then I can assure you that the share price of these IT companies would be, probably, south of between 5 to 10% lower than they are today. It's just that we're getting a lot of ETF money coming in, which obviously buys index names, which is holding these stocks up. But once this turns, there's fundamentally no reason to hold IT stocks. So they will actually continue to go down once markets turn, and they're going to be huge underperformers. And I'm afraid that the industry itself has got to try and reinvent itself, and it's going to be a long haul.
Andrew, how do you see? I mean, how do you analyze the quarter one earnings season so far, and especially some PSU stocks like BHEL, which have shown some quite bit of turnaround in this quarter? How do you approach these names, BHEL, ONGC, GAIL, for instance?
Yeah, no, I mean, results season's been has been okay. I don't think there's been any big, huge negative or positive surprises. So I think it's been pretty much in line with what we were thinking, prior to the results season unfolding. I think on stocks like BHEL, which obviously have positively surprised us. It's a little bit like, I don't know. I'm not trying to compare it with Infosys because it's not the right sector, but you get one quarter which is good and then the next quarter which is bad. So, I'd need to see consistent quarters of good performance from BHEL before being convinced that all of its problems of execution have gone away. And I just think there's better stocks out there that I need to be buying at the moment.
Absolutely. Andrew, thanks for joining us. शुक्रिया हमारे साथ इस बातचीत में शामिल होने के लिए.